A new 24 hours in the market, and we have a new narrative. This time it's AI. AI is back on the menu. Nvidia has pumped to new all-time high prices, taking the NASDAQ 100 along with it to new fresh highs for the last 400 days. Is Bitcoin's turn coming up? Let's take a look at that in the charts today. We have timeframes to get through with BTC, looking at historic data, going through the bear markets and the bull markets to give us an idea of when we could expect Bitcoin's fortune to turn. We're also looking at the DXY as it continues up amidst the backdrop of what's going on in the economy. We also have the NASDAQ and Nvidia, and of course, a quick look at the other stocks as well. So guys, if you haven't already, you know what to do. Hit up that like and subscribe to the channel. This is your home of macro cycle analysis, the only place where for some reason you're getting the truth about the markets rather than the constant bearish narrative of markets dropping and looming recessions and things that basically trigger the bears. All right, enough with that said. This is a family-friendly, fun-time channel. Last thing to note, there is just 24 hours to go for the Aussies. The triple bonuses expire today with Swyftx. Link in the top of the video description. All right, guys, so let's hit up Bitcoin. Got a lot to get through with BTC, what's happening over the last 24 hours. And of course, we'll get into the stock markets because that is part of the overall cycle here. This was a chart that I presented to you guys early this week or last week, so in a recent video, just looking at the sections of a bull market for BTC. Basically, we have 6 sections here. So that's the 1, 2, 3, 4, 5, 6. These are broken down into 6-month periods. You can see we did it again in the previous bull market, and we're breaking it down as we look forward into this current bull market. Now, I understand that that does trigger many of the bears expecting lower lows or expecting 15 or 16K to be tested. I've stated many times before, as I have done throughout the bottom, the reasons why I don't think this is the case, why I think the probabilities are not on their side for a retest of 15K. And for now, it looks like we are still in the midst of testing the low to mid $20,000 range. So that is all part and parcel. It's a normal part of this game, as we can see from the last 6-month periods spanning over this first and second section of this next journey, this next 6 by 6 months. So basically 3-year journey here. So looking at the first to the second from the previous cycle, basically it just is a trading range. We often get a few little breakouts to the upside like we have seen here in the first range in this occasion. And we also saw it in the first range from the previous cycle of 2019. But in the 2015 cycle, we didn't see that breakout till the second range. But nonetheless, it's basically a trading range underneath the old all-time high for the first 3 periods. So basically about 18 months. And that leads us into the halving event, which is coming up in about 12 months time. At the moment, the date is listed around April or May of 2024. So it gives us just under or around 12 months to go until we hit that halving. From that point, it's typically marked only for the last 2 cycles. So not a lot of data, but typically what has happened is that that's approximately that midpoint in the 3-year journey to the peak, and then the approximate 1-year journey into the low. Now, we know that the bear market can be 360 days. In the case of 2018, last bear market was about 370 to 380 days. And then the previous bear market of 2014 consisted of about 410 days, 411 days there. So there is a breakdown here of approximately 12 to roughly 14 months. Nonetheless, we're on a macro time frame, so you have to have a little bit of tolerance here. So this is what I presented to you in the last week, just looking at the data, what we could expect potentially over the next 12 months, where we continue to trade in a range underneath the old all-time high. I don't think that's going to be new to most people. I don't expect a new all-time high in these next couple of ranges. Would be lovely if it did, but nonetheless, the history doesn't show that. But what the history shows is we're probably not going to retest the $15,000 or $16,000 level. And I'm even going one step further and sticking my neck out here and saying we're probably not going to retest the March low, the March 2023 low at 19,500 because of how severe the news event was and what the market did after that event. It basically pumped from that event, okay? So this is also coinciding with what's happening in the stock markets the NASDAQ, the S&P, world markets, where we've all seen rises from that crisis. And this is typical of a bull market climbing a wall of worry. Okay, we'll get to that in just a moment. So the next thing I have a look at is a breakdown of the short term. So this is pretty interesting because we got a couple of ranges repeating here to the downside, which gives us a bit of help with where we could potentially expect the price to go and how long this might last, and more importantly, how long it might last. First up, let's just take a look at the short moves here. So from the 14th of April top, which I noted in yesterday's video was the exact period of the 2021 April top, to the day, a 2-year cycle repeat to the day. I'm not expecting these things to come out to the day every time, but the 14th of April that we just saw here, Friday 14th, and now we saw that first move to the downside, and we haven't seen that 14th of April break yet. That was also the peak, the previous old all-time high before we got that quick November high and then a plummet from that point. Through April, we also saw a move to the downside after the Bitcoin conference Miami thing going on here in the US. And then we saw another dump into May, a pause, and then another dump into June. All the while, these were getting a little shorter and a little shorter and a little shorter to the downside. So essentially, the market is telling you the pressure is running out to the downside. Not my opinion, not this goofball with a jumper hoodie thing. It's the market. I'm just repeating and explaining and reading the book of what the market is telling us. So that's what we saw here. Basically just shorter down moves, meaning there's less selling going on and people are finding a better support at buying up these lows. So that's what we've been looking at all the way back to June of 2022, where we thought that this was potentially the low. And if it was to go a little lower, it wouldn't be that much lower than where we were in June. So the time still needed to catch up. Moving forward to where we are today, basically the short-term stuff. Here is that move from April top. So we go to the top to the low. You can see this was $4,060, $4,000, call it $4,100, but it basically is a 13% move. Now we see the next top to the bottom. We had roughly a $4,200 move, basically a 13 to 14% move. Is this going to repeat? Maybe, maybe not. I suspect it might be a little bit shorter, smaller in that move because we don't expect the moves to get larger in the move to the downside. But nonetheless, let's just have a look at it. If we were to do a $4,200 move, somewhere around $23,500 takes us out to about a 15% drop to the downside. So it comes in just underneath the support levels that we're looking for when it comes to around that $24,000 to $23,900 level. So if we're to get to around that point, just a nice quick flash dump, it's only about 9% away. So if you're looking to get into the market, you've got to weigh up, is that 9% actually going to happen? Is it worth the risk of missing out? They're all the sort of things you want to weigh up if you're looking to get into BTC, because now you can assess the downside risk and figure out how much upside potential there is. Do we think there is a lot of upside potential in BTC to go to 60K or beyond? Or do we actually think that the market's going to break this significant low here at 19.5 and also take out this low, in which case you would then weigh up and say, I think there's at least a there's more than 26% to go to the downside and potentially more than 40% to go to the downside. So this is just weighing up the probabilities. But of course, you've got my opinion here, what I think is going to happen and the way I'm assessing the risk moving forward in the market and how I would actually layer in my buy orders based on the analysis I'm seeing here. So I'm just taking a big look at the short term here, lining up some of the major price ranges all the way down from 24K to about 27K, where you can see this level just getting tested and then broken down. So it looks like BTC wants to consolidate in this zone before it mounts another attack. So more importantly, we need to look at some time frames now. So the time frames from the previous bull market and bear market is going to be a deciding factor here. We need to understand how much time there is in one of these moves to the downside. So taking a little look here at the previous all-time high to the bottom, you can see it was 10 weeks. If we stretch it out to that higher low, you got 14 weeks. So it's just important to note both of those because they are coming up as repeating patterns throughout the bear market. So the next push to the downside was the all-time high, the November high, to the low in January, that was 11 bars. So we're on a bar chart here. Whether you look at bars or candles, it doesn't matter. It's the count that matters. It's the number of weeks here. So about 11 to the downside. Then the significant top here, that was the first lower monthly swing top before the market collapsed through the Lunar UST collapse and the CFI collapse. Again, a repeating time frame here of 11 weeks. Next, we have the FTX collapse and the Jackson Hole Symposium where Powell came out with his speech collapse. And that's all the market could do, was a shorter move to the downside. So you can see the timing is relatively the same. You take it to the FTX collapse, which is 12 weeks. Take it to that final low, which was only a few bucks lower, 14 weeks. So important to note both. But the moves to the downside were relatively equal, but then got shorter and shorter to the downside. So you can see here, if I take it off log, here is your first move, here is your second move. Now it's getting less and less to the downside. So there are a few major things to note. If we look forward to where we currently are, you can see these moves to the downside have been very, very muted compared to what they were in the bull market. So this is quite typical of what I pointed out in the first chart, where we're looking at the different sectors, the different phases or stages of the bull market, that 3-year move from the low to the high, and then you have the other 1-year move to the downside. So looks like we're coming into this second and third at the moment. They're all looking like they're trading underneath that range, and those moves to the downside can be measured as well. So the previous cycle, you can see some of the similar numbers coming up here. You got a 12-week move to the downside, a shorter one here of 8 weeks. You got a big 12-week move to the upside, and this one is just to note the speed of this move, which this was the COVID pandemic collapse, and this basically happened in 4 weeks. So basically a half time frame from the other cycles. You've got 8 weeks and a third of the 12 weeks. So important to note these levels, and as we continue to climb up into the bull market, it'll be important to note the pullbacks on the way up, just as we did during the bull market. And we've specifically covered these for the ETH bull run as well, which worked out really, really, really well. So to where we currently sit, 6 weeks, we're approximately halfway through each of these cycles, 11, 11, 11, 12. And if we extend those out to those bottoms, then we can see they're approximately 14. So potentially in the next 1 to 2 weeks, we will hopefully get a decision on this low. So we got a target for the price range somewhere around that sort of 24 to 27-ish, and also a target for the time frame. This is going to be a massive key for us. So keep these in mind, come back, understand this. Follow us on Twitter for more updates on this cycle analysis. We're looking at price and time targets. That is a big one that most don't even look at. They don't look at time because they don't believe it's possible. But like you can see, the market keeps giving us cycles that repeat over and over again. All right, on to the Dixie. Just a quick update because we've covered this many times before. You can see Bitcoin has been holding out relatively well. We've basically been sideways here. Maybe we'll get a little bit of a dump here, but so far it's been holding out relatively well for the last 3 weeks. Meanwhile, the US dollar has been climbing for the last few weeks. So there is a divergence here, which is different to what has happened in the past. I'm not going to say completely different, but you're seeing some strength in the US dollar while the price of Bitcoin is relatively stable compared to it. So it seems like there might be some more strength in Bitcoin once the US dollar finds some resistance. And so we can see some resistance a little further up at around 105, up to this top price here at around 106. So you can break it down a little further and go to 105.8 or 105.9. Nonetheless, just keeping a nice round number here at 105 to 106. That's our next target range to see whether we get some sort of rejection here for the US dollar. Remember, we're calling a bottom here because of the technicals and because of the fundamentals. The news was ridiculous at this level, saying that the market had to fall. The news was ridiculous at this level, saying the market had to rise. Everyone was on board, but there were previous resistance levels sitting at around 117 based on historic data as well. So marrying in the technicals and the fundamentals helps a lot to identify whether we are actually going to collapse or we're going to move up. And, you know, we've called that one pretty well spot on as well. This brings me to this huge quote. The worst crime that an analyst can commit is remaining bearish in the face of a rising market. And this was said by Richard Russell. Richard Russell was a Dow Jones enthusiast basically, he's known here for his calls. Gold and stocks in 1960, called the top of the great bull market in stocks in 1966, and announced the end to the great bear market in December of 1974. So he was around in those earlier days. So you can see the life that he led there from 1924 to 2015, American writer on finance. And so I really love that call there. The worst crime that an analyst can commit is remaining bearish in the face of a rising market. And it's basically what we continue to see here with the NASDAQ, a rising market from October. And yes, the calls for recession have been pushed out further and further and further. First, we heard the recession had to be here. Then we heard the recession had to be in the first half of 2023. We've got 1 month to go. Now we're hearing the recession has to be in the second half of 2023. It honestly doesn't even matter about the word recession. We've seen a technical recession in the first half of 2022 with 2 quarters of negative GDP. We have seen a recession in 2020 with the pandemic dump. So we've seen essentially 2 recessions in the last 2 years, and people still want a third recession. Like this quote says from Richard Lyon Russell, here is my quote: "The worst crime that an analyst can commit is remaining bearish in the face of a rising market." And these guys, the macros anyway, who continue to remain bearish in the face of a rising market, you know what my answer is here. Basically, NASDAQ, it's its highest price in 400 days. This is on the back of NVIDIA. Short sellers losing $2.3 billion in 1 day as stocks soar. Yes, I'm not laughing at people losing money. I'm laughing at the fact that people continue to try and short these markets when they are going up. This is NVIDIA right now, and they've been shorting this thing on the way up, which is a very, very dangerous game to play. And I'm not here to tell people to play dangerous games. I'm very conservative and very safe in the market, which is why I continue to follow my swing chart and just follow what the market is telling me. This thing blew through all-time high prices, absolutely destroyed these guys. And if they were in shorts here, trying to take as much as they could from the market, that will wipe out their accounts. You cannot hold into that and hope for the best if you are shorting the market. So that's what's happened here. NVIDIA short sellers lose $2.3 billion in 1 day as stocks soar. The gain pushed short sellers in 2023 paper losses to $8.1 billion. So there might be a lucky few who are just doing 2x or maybe 3x on their shorts. But if they're 10x, you cannot hold into a move like that at a 10x without putting more money in or just basically wiping your position out entirely. So is this a problem? Is this a problem for the NASDAQ stocks because there's only just a few of them pushing the market up? That's a common question as well, and we've covered this many times before on the channel. So make sure you do like the content so you see it, subscribe, and obviously share it with a friend as well. We've covered the reason why it's not an issue if the NASDAQ is rising with a few stocks pushing it up. Same sort of thing for the S&P. This is this was a narrative weeks ago where a lot of analysts were trying to call this a problem because they need the whole market to rise in a bull market. That will come early on. The cream rises to the top. The cream rises to the top. Then people take some of that cream off and they throw it onto a pile of shit. And the pile of shit is the rest of the market. The same thing happens in crypto. The cream rises to the top early on, your Bitcoins, your Ethereums, whatever altcoin it is that you've married. Then you and me, we all take a little slice of that cream off the top and we throw it onto some shit like Pepe or Doge or any of these other meme coins, maybe ADA, and we wait for those things to go up in value as well. That happens at the end of a market. So if you're worried about the NASDAQ or the S&P rising on a few stocks, don't be. This is what happens at the beginning of markets. Now, I'm not saying that NVIDIA is going to hold out these levels forever. That looks obviously overblown. Maybe it comes back down, fills the gap. We'll wait and see, right? But the point is that these markets will rise, like I've got here as Apple, as an example. They'll rise on the back of a few strong players because these are the cream of the market. All right, guys. Last note here, my friend here, Akil, he'll be on the channel. He works with Phil Anderson with the Property Share Market Economic Company. He has just released his book. It'll be out in July. So I'm just giving a quick shout out to Akil. I'll get him on. He knows a hell of a lot about the 18.6-year economic and real estate cycle. Just thought I'd give him a shout out. And maybe if you want to go and purchase his book, you can do so. Links are here. I follow him. Go and check us out on Twitter as well. That's it for today's video. Huge update again, explaining what's going on, what I expect to happen in the next couple of weeks. I hope you found some value. I'll see you at the next video. Stick around on Twitter. I'm doing a live space with Eric Crown this afternoon on Friday. Otherwise, I'll be back here with another video in the coming days. Until then, have a good one and peace out.